Okay, yeah. Hold on. Okay, NASCON Allied Industrial, they just reported that H1 2026 results. So if you look at it very closely, you see that revenue grew by 3%, net margin grew by 24%, gross margin grew by 50%. If you look at it on the surface, it looks good, but of course, you need to dive deep into these things and see if there is any devil in the detail. So let's go. Now, like we normally say, this analysis is more timelier on X, of course. So always follow up on X, Apex _invest, where you get these things on time. So let's get to the books. Before then, we explain to you what really happened. Okay, so let's get to the price chart first. See what price was at the time. Hold on, trying to get the price chart. Okay, this is the price chart of NASCON at the time of recording. You see what price has done. Pretty moving up down to, but the recent all-time high was over 220 naira. It's now dipped down, came up a little bit, currently sitting at 195 naira. That is it about the price chart. So let's look at the income statement. If you look at the income statement side of things, you see that the top line grew by 3%, the midline too grew here, and you see the bottom line side of things also growing. But keep your eye on this finance income. Finance income did a real heavy lifting. We'll get to it. Then if you look at the key ratio side of things, the margins are all looking up. It's only the taxes, but everything looked up on the surface level. Of course, we go to the nuance around it. Then, if you look at the balance, where is the balance sheet? So if you look at the balance sheet side of things, you can see that the assets grew, equity side of things grew, and if you look at the ratios to everything looking up, the current ratio, ability to cover short-term obligations, all of them comfortably sitting above the benchmark of 1%, so they can comfortably cover the short-term obligation. Then debt to equity side of things too, pretty sitting well. Then return on equity, return on assets only dipped because of the margin at the rate at which assets grew and the rate at which equity grew. Then finally at the cash flow, before we now dive in, if you look at the cash flow side of things, cash flow dropped a little bit, free cash flow dropped a little bit. It used to be 17.137 billion in H125, but now it is 15.57 billion in H1 2020. So let's dive in what really happened. So if you look at the revenue can be, we can say that this revenue, 50% of the revenue or the profits are 50% are operational, while the remaining are just macro driven, especially coming from financed income. Number one is they did some trading, leaving their core business, which sometimes you can't afford them due to the environment. The NASCON, they did two things. First of all, they packed 6 billion naira into the related party, Dangote Industrials. So they promised Reno. So they packed in 6 billion naira there to earn 15%. Another 20 billion, they put it in Dangote Sugar, Octa in that one at 18%. So making money from both ends there. Then FS gain of slightly 385 million. Then in the segment and region side of things, regionally, the percentage of revenue, the total revenue, comes more from, a bigger chunk of the revenue comes from the northern side of the country. So 76% of the total revenue comes from the north. So bear that in mind. Then, but the growth, that revenue just grew by 1.17%. Then in the east, the revenue grew by 28.9%, while in the western side of the country, the revenue just grew by 8%. So you see that the east and the west did some heavy lifting, even though it is small to move the needle, because if 76% of the revenue is from the north, so the remaining fraction is just little to move the needle, but it's worth noting. Then another thing to note is that if you look at the balance sheet, you see that their payables, the tax payable now is ballooning. It's now sitting over 21.77 billion. Then the dividend they are paying tripled. NASCON, the dividend tripled from what it used to be. From 15, the last dividend at a time total was 15.4 billion, but now it's over 16.21 billion against your operating cash flow of 16.1. So almost you paid more than the operating cash flow, and you dipped into cash too. Maybe the dividend policy, who knows? So that is some of the things we note about NASCON. So you can read up more of this so you get a sense of this and add it to your analysis. See you on the next one.